I really think that the future of financial services will be on blockchain networks. I just think that's going to continue and continue and continue. And I believe the reason for that is
Shawn Douglass is the CEO and co-founder at Amberdata. Amberdata is a real-time analytics platform powering crypto risk, DeFi strategy, and derivatives pricing for institutions like Fidelity, Galaxy, and Nasdaq.
Do you think that whole concept of accredited investors has actually been instrumental in creating the largest shift of wealth to one corner?
you have to be an accredited investor, which just means you're rich. Doesn't mean you're smart or sophisticated. You may have gotten that money by luck. So I think empowering people to take ownership and control of their own future and be able to see and understand and have the data telling them this is a good investment because I said so. I think that's the future where this is going to go, is opening up this transparency and information and access and better trust.
Shawn, welcome to Alpha and Ashed.
Well, thank you. Nice to be here.
Shawn, I was reading up a bit about you and Amberdata just before this going on our pod, and I realized that you were mining Bitcoin very early, back in 2010, and then 2017 is almost when I guess you started Amberdata, just around the ICO boom. What made you change from a very early participant in the space to an operator?
Yeah, that's a good question. So, I used to live in Silicon Valley. Now I live in close to Miami in Florida. And I learned about Bitcoin early on. Just I was surfing in Ocean Beach in San Francisco, and a friend of mine was telling me, you should go to this Bitcoin meetup at Stanford. And so I was like, at that time I was a venture capitalist, and I went to the meetup. I'm like, oh, this is really interesting, and like you can mine this. So back then it was very very early mining days. Tried doing a bunch of different CPU mining and then GPU mining, and then the first ASICs were coming out. So I ended up buying one of those, set it up at a plug and play tech center in Sunnyvale in a data center, after almost burning my house down, and kind of was participated really early. The pools were just getting started,
Right.
and I was interested in the space for a whole bunch of reasons. Then I saw, the Ethereum token sale also in the Bay Area, the kind of the road show. And to be honest, like I now know many of the people that were in that initial road show pretty well, but back then I thought it was a little bit of a crazy idea. I didn't get it. I was doing enterprise investing. But fast forward about a year later, and it really caught my attention when I started to see that decentralized infrastructure could be, a disruptive force for even people like AWS. And this is before DeFi, before NFTs. It was like there was like
Mm.
memory and compute as a service. And I thought, if that happens, people will need operational telemetry. They will need to understand and trust the trustless network. And very familiar with data and analytics and what have you. And then we, kind of saw that opportunity. And then I revisited that about a year later, when we started to have all the ICOs going. And I participated in a bunch of early ICOs, and it was really, really not a great experience.
Mhm.
And I just had a reaffirmation to myself and now my co-founders that it was like, okay, if this is now becoming potentially not the new cloud computing, but the new fabric for institutional financial services or what have you, then they will need to have not only operational telemetry, but data analytics and insights very similar to, a Refinitiv, which was, later acquired by LSEG, or, a FactSet, a Moody's, an S&P. They will need to understand what's going on. So that was kind of the evolution of how went from, early tinkering and mining to building out the business we built today.
That's a sort of long and I'm sure a very exciting journey, and we'll kind of dive into that as a founder. What were some of those exciting and more challenging moments as well within that? But before that, staying with Bitcoin, you mentioned CPU mining. And till when was that even possible to mine with CPUs?
I don't even remember, that was so long ago. My biggest, I think I had Butterfly ASIC miners, I think in like 2011, and then I bought the 1.2 terahash Terra. What was that? I can't remember. Terra miner. And that was the first, kind of big scale over 1 terahash miner, and moved from mining myself into mining more in pools, and bigger commitment on my side. I think those miners were like $12,000, and I think my electricity bill was like $600 a month in a data center plus rack space.
Uh,
So unfortunately, I didn't keep all that Bitcoin. I wish I would have. But it's pretty hard going from $260, I think, up to I think it was like 1,400 back down, and then you ride that a couple times, and so yeah, I wish I would have just kept that going. I don't even know what
yeah.
the hash rate on the new miners are now. They're like exponentially more powerful than back in the day.
Right, but I was curious to understand. You mentioned, I mean, obviously the more the ASICs were all GPUs, but
Yeah.
could you in the initial days actually mine using a basic CPU as well on your computer?
Yeah, I not and make any money. Like for me, it was like proof of concept,
Mm.
get the idea, and then quickly deployed capital to capture the opportunity. Yeah, I didn't spend a lot of time with that back then.
Sort of fast forward,
Yep.
and Amberdata. What's the sort of easiest analogy, and it may not be a great analogy. Is are you trying to build a Bloomberg for digital assets?
I would say, Bloomberg is a lot of things to a lot of people. I think that we're more similar to like a Refinitiv for digital assets. So what we do is we do institutional data and analytics for digital assets. And what that means is we connect into, it's about 65 of the most active trading venues globally: spot market, derivatives markets, options venues. And we um, connect into the top blockchain networks and do aggregations and create proprietary unique insights into all the stablecoin activity, all the dexes, all the lending protocols. And we make that data look like what somebody from traditional financial services does. And then we deliver that in a non Web3 format into traditional APIs, big data and analytics platforms like Snowflake, like Databricks, like Google Analytics Hub, bulk data via S3. And we deliver that to some of the biggest players, whether they be front office doing trading or portfolio management or research or trade surveillance or risk, or back office fund admin, tax, accounting, even the regulators. We deliver that data to them, and they build their operational infrastructure on top of our data and APIs.
Hmm.
And we're really the operational, the data and analytics backbone for some of the largest TradFi and crypto native and even regulators in the space.
Right, and so some of the um, liquid crypto investors would be your largest clients.
Yeah, we have many of the largest asset managers, hedge funds, market makers, OTC trading desks, exchanges. Yes, even we partner and power Nasdaq trade surveillance, Smarts, which is doing trade surveillance on many of the largest crypto exchanges. So it really spans the
Okay.
whole spectrum. People like
Right.
Fidelity, Galaxy, a pretty long list of customers, Citibank.
And so would they use your APIs to access the analytics, then run their own extract their own insights and transact on them, or is it completely data pipelined, and your API is actually the information flow is directly transacted upon in on their trading platforms?
So most of our it really, because we serve such the entire value chain for it depends on who you are and how you
Right.
act, but um we're generally delivering pre-trade, as in order book events and what's happening in liquidity, to post-trade. what did you get filled at, and what was the valuation of that asset, um, and then the analytics. What's if you're trading derivatives? What's fall surfaces? What's the
Mm.
skew? What's the dealer net gamma positions, etc. Um, delivering that, and it empowers people to identify opportunities, quantify risk, do trading either at, from fairly high frequency to long duration holding and valuation. We have like Fidelity's been one of our longest standing institutional customers, and they have broad swath of products, everything from an ETF to asset management to all kinds of products. Power research firms like Galaxy, and a pretty long list of other research. We also have a research team to introspect into what are the economics, incentives, outcomes, and most of our lens is we deeply understand traditional financial markets, and from everything from derivatives trading to spread and yield and arb and what have you, and we're basically said, demonstrating that a lot of what's done in DeFi is um, looks like what's been done before, but has unique differentiating innovation, and we make
Mm.
what looks normal look normal, and we call and bring light upon the things that are material and unique in stablecoins or DeFi or what have you. So we really empower people to understand and act.
Right. Okay. And so your analytics obviously covers both the CeFi and DeFi side, and I'm guessing the coverage on DeFi is sort of increasingly becoming more and more over the last 2 years, I say.
But it's interesting. Yes, we absolutely do cover. I think it's $600 billion a day in notional trading volume. We ingest and process about 2 million events a second, and we deliver petabytes and petabytes of data to our customers. So it's a pretty crazy data ingestion and analytics platform, and most of that's done in real time. Um, so when we started the business in 2017, um, there was no DeFi, what have you, but the very first, really DeFi protocols, we had already instrumented those. So like we did the very first open high low close charts for Uniswap.
Mhm.
It's people use our data to clean up risk in Aave to find out who needs to be liquidated. People use our data to understand, are people getting leverage by doing flash loans and operating, at scale arbitrage between centralized and decentralized exchanges, right?
Mm.
So, I mean, I love what we do. It's like
Mhm.
really, really, really bleeding edge with regards to providing data analytics and insights into liquidity, economics, and and risk, what have you, for what's happening both across centralized trading venues as well as DeFi, and that's where we're really uniquely positioned.
Mhm. And do like vault curators also use Amberdata feeds as well?
Yeah, we have, we partner with, like, for example, Gauntlet's been a very early customer, and I've got mad respect for that team. They do all kinds of really, really unique analytics and insights into lending protocols and vaults. And we work with a lot of the other firms that are um, not only just the protocols themselves, but also the people who are liquidity providers or actors in those protocols. So we have a pretty broad swath of
Mm.
um, bigger players. We don't do anything retail other than just our open market intelligence platform and open derivatives analytics, because we're really focused on the institutional, and it's at a price point where it's not really retail. What we
Mm.
do is unfortunately incredibly expensive to do.
Right. No, I'd love to dig into that more. I mean, as a founder of an advanced DeFi asset management platform on a protocol,
Yeah.
if there's so much curation that's needed to have DeFi structured products, which still remain DeFi native in architecture, but
Yep.
or have to remain, but the curation has to be pretty robust. So I'm would like to ask you what are your thoughts on on-chain asset management and how you see Amberdata kind of being a catalyst for decentralized asset management platforms.
I think we would both agree that the future of financial services will leverage blockchain networks. And you listen to what Larry Fink is on TV almost every single week saying is there's 30 70 trillion dollars of assets that are going to be tokenized by 2030. Similarly, Franklin Templeton has tokenized their Benji US Treasury bond receipts. You have Apollo that's tokenizing north of $1 billion worth of liquid funds. You've got Goldman, you have Fidelity. Most of the incumbents are beginning to tokenize things. And if you think about it, there's a couple things that are happening there in my mind. One, what is a stock on a stock exchange? It's just a ticker symbol in somebody else's database. You don't really own that asset. It's in a brokerage account. It's a virtualization, if you will. So when you own a digital asset, you can use that digital asset as collateral. You can take and generate additional yield. You can create structured products. It puts you in the ownership seat,
Mm.
and it allows you to be more in control and have better transparency and better visibility. And I think that there's several other trends that are critical that will enable kind of tokenization in the future of financial services. One is the demographic play. People like a BlackRock or other large players that are used to selling to institutions can now break up those long duration assets into unique products and deliver those to a different demographic in smaller pieces. Two, this is a global market. This opens up the TAM of who they can sell to the entire world in smaller bite sizes. So there's a major driver for them to do that there. The third is by leveraging decentralized networks, whether they be public and open, which is my preference, or you know uh, kind of walled gardens. Either way, they are able to create new financial products that run on somebody else's infrastructure, and they don't have to pay for that. So there's an economic incentive, there's a global TAM expansion incentive, and there's a demographic incentive. And I think that those three things, with the ability to also create unique new visibility and insights and unique financial products, make this, it's going to be a massively, massively disruptive technology that I think will be the fabric of financial services. So I'm super bullish long term on DeFi, and I think it just becomes Fi.
Yeah, no, absolutely. So, one of the things that from a macro perspective, I throw is that if you look at TradFi assets under management, they're over a third. 36% of all TradFi financial assets are under management. In crypto, it's only 3%. In digital assets, it's 3%. The three has to grow from 3 to 10 to 2030 over the last, next, 5, 7, 8 years, as the asset class itself grows. And it cannot be in that will not come via ETF wrappers. It has to come by native designed DeFi asset management platforms. And this is where the whole data analytics, asset management, composability, everything can come around, and of course, custody and not just a ticker. So everything can come around completely. The full circle is gets closed with DeFi.
Shri, I'd love to learn about your platform. It sounds like you're doing some interesting things in the DeFi from an asset management place.
Yeah, Sean. Yeah, always happy to talk about Arna, though it's supposed to be about you today, but I'd love to do that now that you've given me the opportunity. I was reading. I came by this stat, and I think you'd spoken about it as well, as far as derivatives are concerned. How in legacy financial assets, they're like 14 times of spot, but on crypto it's just thrice 3x. So there's a huge opportunity arbitrage and all of that there. In fact, I had a founder of a derivatives platform on Ash pod earlier, and exactly their whole thesis is around the same thing. going from that analogy, if you talk about asset management, like I was mentioning a little bit earlier, it's more than a third of TradFi assets go through management, and in crypto digital assets that has to happen. But my thesis has been that that has to happen in a completely DeFi native architecture. So it has to be built on a decentralized on-chain asset management stack. So that's what Arna protocol really is, an on-chain decentralized asset management stack. But the way we've gone about it is converge three vectors: all the analytics part, all the alpha discovery, the risk is through an AI deep learning framework, which we've developed as a proprietary model called Alpha 37. Then the tokenization platform for essentially structuring any product. Again, taking the asset management analogy, whether it's a simple ETF index to a mutual fund to a more complex hedge fund. So tokenization platform that can structure these products and take the feed directly from the AI predictions and autonomously execute. And the third is really abstract all of this and make the entire access to DeFi to these structured products very UX focused. And so we've gone mobile first. So our DeFi app is on iOS and Android stores, and connect seamlessly to any wallet and operate. So it's a whole protocol to create crypto structured products, digital asset structured products, to help high value users manage their digital assets life cycle. So yeah, there you go.
No, it's good. It's good to hear what people are working on. I think that's great. I think that the whole derivative space is just we're going to 10x or more from here. You look over the last year and a half, there's been 3 or 4x growth in trading volume. Coinbase did I think, $3.8 billion acquisition of Deribit. You've got trading volume massively ramping up on CME. You've got, you know, IBIT options now being one of the most liquid traded options. Like and I think that all of the most sophisticated surgical risk managers in the world use derivatives every day. And when those come in and you can do portfolio margining and create structured products and do composability of DeFi products, that's going to be game changing. And when people catch on to that, it's really, really, really powerful. Because if you traded options on CME or NYSE or whatever, and you get assigned, you have no idea like why well, maybe you know why, but you're like you don't know who's on the other side of that, and you often feel like what just happened, right? And I think that with DeFi, you have the ability to actually understand the full telemetry of everything that's happening in real time historically. And that plays to both the hardcore quants as well as to just trustability of the financial infrastructure. Because, I think for me, digital assets of crypto, it's about trust, transparency, and incentives drive behavior. I think this is the trump card. For me, it's not about decentralization. That's a byproduct about trust, transparency, and incentives. And being decentralized solves a lot of problems, but the primary incentives drive behavior. And I think that is which is radically transformative. And to do more and more of that derivatives plays and enable that in DeFi platforms is going to be game changing. And I think it's the future. I really do.
Right. And quite understandably, a lot of the DeFi innovation and participation has been very degen like.
Mhm.
But for it to mainstream, we need to have the option of putting a complete complex degen loop into one structured product. And DeFi completely enables that. However, how do you sort of bridge how do you bridge the analytics into execution, on chain execution, real time, and at the same time manage risk vectors like MEV, for example. I'm sure so you've been doing so much work in the space. What are your thoughts on that?
Well, I think MEV is a separate topic than the other one, and it's has its you go for days about MEV. I'm probably not the deepest there, but it's a real operating risk and concern, and you need to be able to understand what was in the pending pool on Ethereum or and then all of the it becomes incredibly more complicated with all of the private networks now because you don't have that transparency that you would hope. Um, and with all the different participants, it should balance incentives and what have you. I don't know yet. It's TBD because it's really difficult to actually see what's going on in somebody else's sandbox, right? It's not completely transparent, but from the risk perspective, I want to talk about the risk, the opportunity, the actors, the actions. That actually is really interesting. So today, if you want to trade, you want to buy a call option on, whatever, pick your favorite token. And you can pick something major. Like if you want to buy a call option on ETH, okay, you can do that in CME. You can do that. Well, let's do Bitcoin because you can't do ETH on Nasdaq. But so if you want to do a Bitcoin call option, okay, well you can do that in CME today. You can do that on IBIT, on Nasdaq today. You can do that on Deribit, Binance, Bitget, like a long list of centralized exchanges. Similarly, there's DeFi protocols that allow you today to buy, sell, and even create spreads in DeFi protocols. So therefore, what is the implied volatility for that asset? Or depends on which venue, depends on what time of day, depends. So you start to get different um, different vol surfaces, different implied volatilities, different incentives, whether it's a centralized versus a decentralized trading venue. What's the funding rate? What is if somebody has a less liquid DeFi protocol where they're bootstrapping, we provide SVI fitted services for altcoins. So people, whether it be an OTC protocol or a protocol like Derive, where they're actually, using that to price their option markets, but those are all related. You actually have to understand if you're a TradFi institutional trader and you're only trading on CME, well, guess what? That's the tail. That's not the dog. Deribit's the dog. So even if you think I'm a TradFi player and I only care about what's happening on CME, you need to be aware that if there's liquidations on Deribit, those are coming your way right now, right? And similarly, you can say, well, I'm a TradFi guy and I only or girl and I only care about BTC options on CME. And you're like, well, wait a second. I don't know what the exact percentage. More than 50% of all crypto that's traded is not quoted in US dollars. It's quoted in a stable coin. Oh, well, what does that mean? Well, that means that the the actual you have a secondary risk there where if you have a depegging of a stable coin, that's going to happen on Binance, that's going to happen on Coinbase, that's going to happen on Kraken, Gemini, go all the big exchanges. That's going to propagate to the DeFi lending pools, which is going to cause liquidations, and you're going to have a cascading effect that ultimately is going to come back and hit CME. But people need to understand, you really need to understand, what are the pockets, what is the liquidity, what is the flow, what are the flows, what are the incentives, because you have a fragmentation. It's not like I'm trading in Nasdaq's database and with a virtualized ticker symbol, even though that's what the old world order is. I'm actually trading on a global market that has, it's more like FX than it is like equities, right? Because now I have currency pairs, I have liquidity pockets, and they're all related. So once you start to get into the derivative space, and now you have an amplification effect of nuance behavior. You can People will be like, well, hey, I want to trade the perpetual futures contract on Binance or on uh, BitMEX, right? And you're like, well, what are the lending rates? Well, is the market in contango or is it in backwardation? And did it just flip Is that local or is that global? Is the front month, back bar month yield across those, the duration in the yield curve, is it really, or is it just a local problem because of liquidity on a particular exchange and the order book is tilted one way or the other, and the exchange is adjusting their lending and borrowing rates, which shows up in the perpetual futures contract. There's like
Hmm.
it's amazing. There's never in the history of financial services been such information and data and analytics and insights of what are the underlying economics available,
Hmm.
but it's overwhelming, right? So you really need to understand it, but there's tremendous opportunities for everybody because of that. Sorry, I kind of went down a rabbit hole on that.
No, it was sort of fascinating to understand that. I'm just trying to understand for a obviously a much more relatively younger asset class and a highly volatile one where we know drawdowns can be as high as 10-20% on a every day, not
Yeah.
in a year. And the derivative volumes in crypto going from where it is to 10 times more, what's the sort of additional uncertainty that they could inject into crypto markets, or do you think it's going to be the other way around?
Every risk asset has catalysts and fundamentals that kind of hold things in ranges, and then there's catalysts that change things, and that risk takes a while to propagate through systems. But so, are you asking like what are the new risks that we don't know? Or are you asking like I'm not clear? Can you clarify the question? I'm sorry.
So if derivatives volumes in crypto are 10 times of what they are right now, do you
Yeah,
think they will inject more uncertainty into still a relatively sort of a new asset class and a new market ecosystem for crypto and digital assets, or do you think that will they will help spur the maturation?
I think it helps for the maturation because the more liquid a market gets, usually the less volatile it becomes, unless there's some outside catalyst like crude oil. Actually, Bitcoin right now is less volatile. I haven't checked it natural gas prices lately, but you know nat gas is pretty high implied volatility generally, and I think implied volatility on Bitcoin right now is like 40 or something. It's pretty low. So I think that the more people that enter any market, it becomes less volatile and more liquid, and becomes harder to make easy money, right? But I think that's just a natural progression here. And today, institutional asset managers, it's still early. They're not like Fidelity and BlackRock are now making, aggressive portfolio allocation recommendations in some of their products, but aggressive is single digit, right? And they're leaders in this space. Old school asset managers, they're still just coming. I think that, there's new opportunity that's being created by DeFi that allow you to create new structured products that are unique. You could say, hey, like I want to take a tokenized treasury bond and I want to generate yield, but then I want to collar that with, downside risk. So I'm not just selling a put. You can do very sophisticated kind of structuring of products that you used to have to do through, ISDAs and OTC transactions, that you can now just compose those things yourself. Or as an asset manager, you can say, I'm going to pull 13% yield from this pool. I'm going to mix that with, a call option, and I'm going to package that as a product, and I'm going to tokenize that. You can't do that before. That's radical, right? That is super, super powerful. Um, it's also potentially risky, and derivatives in the hands of the uninformed are potentially instruments of mass destruction. But so is just so like financial advisors telling people to do covered calls. Hello, that's selling a naked put. This is like, but it's okay because people are, I think, fairly uninformed in TradFi, that they recommend things that are not safe, that are not something that I would do without thinking about it. But so I think that there's an education that needs to happen for people to ramp up. And I think it's the opposite of what we have today in the United States, where you have to be an accredited investor, which just means you're rich. Doesn't mean you're smart or sophisticated. You may have gotten that money by luck or by inheritance or what have you. So I think empowering people to take ownership and control of their own future and be able to see and understand and have the data without having to have some intermediary telling them this is a good investment because I said so. I think that that's the future where this is going to go, is opening up this transparency and information and access and better trust. Because when you put your money in, I was in Silicon Valley Bank with $30 million when they went bankrupt. That was pretty scary. It's not supposed to be that way, so I think having visibility when there's what's happening in a market is really, really, really important.
No, that's you mentioned AIs, accredited investors. What's your Do you think that whole concept of accredited investors has actually been instrumental in creating the largest shift of wealth to one corner?
Well, I don't get me going down the libertarian path because we can go for days. But I think that it's not fair, and I don't think that it's um I think that if you tell me that you're trying to protect me from myself, no thank you. Right? I'd rather be able to take and benefit from opportunity that you get to benefit from, and don't try to protect me from myself. Get smart, protect yourself. Don't depend upon the government to protect you, because guess what? The government's been ripping you off since they went off the gold standard in 71. The US dollar has been lost 90+% of its purchasing power. They print money. There's just, this is, you like trust, transparency, and guess what? You don't get either of those with the legacy systems, similar to for fractional banking and banking reserves. There's so much irony, and I think DeFi and the future is people are waking up, right? You read Dalio's new book on how governments fail. It's terrifying. You're like 3 chapters in, and you're like, wow, this is like everything is happening right now today. I'm not I haven't finished reading the book, so I'm not endorsing the whole book, but I'm like 3 chapters into it, and you're like, check, check, check. This is not good. Debt cycles, and how this plays out. He's an amazing writer, obviously, but there's he's not the only one that's been ringing the alarms for the past 10 years.
No, that's if we get into that, we're going to be getting into that sort of a rabbit hole, and we
Yeah,
clearly there's so much happening, which and it's sort of you spoke about trust, transparency, and incentives that are making DeFi and this new financial system work, and it's exactly the perverse trust, transparency not being there, and perverse incentives being there to structure
yeah.
everything in the wrong way. And but yeah, the it'll take I don't know what is that next radical shift that will change things. It doesn't seem like the more the baseline for any radical event keeps on shifting, and everything just normalizes then back to the same perverse incentive for behavior. But we'll move on, and I'd like to understand, Sean, how was it when you got started 2017, 18, still very early to build sort of real data infrastructure for digital assets for crypto? I'm not even sure whether the word digital assets was
It
uh,
wasn't. No. Yeah.
it wasn't
It
being
was
used.
called Bitcoin and Ethereum.
Yeah. Right. So
Yeah.
how was it founding a company? What were the sort of early day stories? Some of the biggest challenges you faced in sort of onboarding your first client. Love to hear that.
Yeah. So I think it's pretty obvious we were way too early when we started this. And crypto has been, or digital assets has been, a interesting market, and we've gone through cycles and vintages, if you will, that happen faster than many traditional markets. And we've gone, kind of the 2016 to 2019 vintage, if you will, and it was ICO frenzy. and the creation of dexes and the creation of lending and maker came out of that genre, right? Then there was kind of the 2019 to 22 bull market where FTX and was challenging the CBOs and CMEs of the world, and there was a awakening of institutions that, wow, we need to pay attention, but they were still afraid to put a toe in the water. Of course, then there was post that it was total devastation of 30% of the players in this space stopped. Regulators told them to stop. People went to jail. Bad things happened. And then we're back up into the right now. Post launch of the ETFs, this very clear regulations being put in place in Singapore, Dubai, Abu Dhabi, Hong Kong, the UK, the US last, with the new stablecoin bill just
Yeah.
recently passed the other day. um it's been interesting. When we first started the business, um the original thesis was, I was a Silicon Valley guy. We were focused on enterprise use cases, and we are like, "Hey, JP Morgan has this version of Ethereum that's going to have smart contracts." It was called Quorum back then, and if banks use this for settlement and smart contracts as just workflow automation, like every consulting firm in the world for the last 20 years is saying, digital transformation, right?
Hmm.
If this is just an extension of digital transformation and
Yeah.
cloud computing, then they will need this. Well, when we started, none of those were in production yet. We thought it was going to be sooner, and what we were in a meeting with one of our customers, and my co-founder and I walked out of the meeting. It's funny is that I'm always optimistic. I'm like, this is amazing. This bank and this bank, we did all this. We monitored it. We did all this up. She's like, we are so screwed. There's two banks that
Hmm.
are doing test transactions. We need to pivot. So we pivoted to public Ethereum. And this was during the ICO boom. And we built the very first analytics platform. There was, Etherscan, who I have mad respect for because they were first, but they were really just like text dashboards. There wasn't a lot of insider information. It was just a blockchain explorer.
Mhm.
And Matt and the team over there, they've done a phenomenal job. They really have done added so much value to this space. But we were not trying to do what they were doing. We wanted to do financial analytics.
Mm.
So we built that and found out that nobody wanted to pay for that. The only people that wanted to pay us were hedge funds, and they wanted data via API so they could arbitrate and inspect and do accounting and what have you. So
Mm.
we kind of found our way through a series of fast learnings, if you will. And I'm really happy is that today we've been afforded the opportunity to survive through all of everything that's happened, and
Mm.
we've worked with the smartest people in crypto, the smartest people in TradFi, the regulators, and today, my God, we're at the right place at the right time with the right product with the right customers, and it's 30x from here, right? So
Mm.
I'm excited, but man, it's not been a straight line for sure. And you've been a founder. Every day you wake up in the morning and it's like I'm on top of the world. I just got punched in the face. Like I don't know what's going on. Like
Mm.
you just kind of have to dust yourself off, pick yourself up, and point at the horizon
Yeah.
and go. You know.
Yeah. No. And what's your sort of vision for Amberdata and roadmap for the next couple of years?
Yeah, the vision for Amberdata is very it's crystal clear in my mind. Is that um, today we're probably less than 1% of traditional financial services, and by 2030 maybe we're 10% the digital assets market. Today that's data and analytics and traditional financial markets is a 23 to 60 billion dollar a year industry. They're all built on legacy systems and legacy data sets, and they need to adapt. And it's incredibly difficult, incredibly expensive, incredibly hard to find the right people to build what we've built. So this is what people need today to be operating digital assets. And when digital assets becomes the fabric of financial services, we will be, what a Refinitiv was for traditional, legacy systems, or a Bloomberg, et cetera. And we will just become the analytics and insights across everything
Mm,
that's, happening in financial services, not in, just bonds or just
mm,
equities or whatever, right? It's really, this is the future. And I don't think there's anybody else, whether they're in, legacy incumbents, or, other players that are positioned like we are. I'm just incredibly bullish on the space, the
yes.
opportunity, who our backers are, who our customers are. Um, you know, there's just so much success going on in this space. I just want to not screw it up and keep the train on the tracks. you know,
And is sort of the inorganic route sort of part of your defined roadmap, or is it more opportunistic? I understand you guys may have made the acquisition of Genesis, Genesis
volatility. Yep.
Volatility. And so
Yep.
how did that come by, and and what's your thinking around the expansion plans?
Yeah. So, we've done the one acquisition of Genesis Volatility. It's going on 3 years. And I was I've been doing derivative stuff for 20 plus years, and I saw what they had built. And previously there was another company called Skew, which Coinbase had acquired. And I I I was a huge I saw that space, and I was like, man, I would love to build or acquire a company like that. And then when Coinbase acquired Skew, we had also been familiar with Genesis Volatility, and Greg and Pat, the founders there, um, just really, really, really smart, talented guys who had built an amazing product, and it just made sense. Since then, we probably looked at 30 acquisitions, and it's really hard to find a, 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 a an asset to acquire or merge with, where their cost structures, their burn, their product market fit, their revenues are truly accretive. But I believe right now the market is ripe for consolidation, and we
Mm,
have the best data analytics platform out there. And whether you're building vertical, there's a long series of vertical applications in traditional financial markets, with derivatives being one of them. You know,
mm.
we're we've we will continue to look at doing more acquisitions and more strategic mergers, because right now you really need to um, grow in order to grow the TAM. You've really you can grow, you can expand geographically, you can expand into your existing company your clients, or you can expand by adding new vertical applications. So I think that I plan to do more market consolidating acquisitions.
Right, and and all the best on that roadmap. What's your wildest prediction for the markets in the, let's take the next 2 years? What's your wildest prediction, even if it's at, let's say, a probability of zero point 0.7, zero point 8, but what would be that?
To me, there's nothing that's too wild. It's like obvious. It's just when.
Mm,
Um, I I think that we will see Coinbase and Kraken and many of the largest exchanges start to tokenize equities and trade equities at the similar volume that you're seeing on the traditional stock market exchanges. And you're already seeing IBIT, which is Bitcoin, ATF, which is just, making it available out of a different sleeve, available on TradFi. So we're going to see a convergence in a can where the distinction becomes less apparent between TradFi. This is a better platform and a better uh for a lot of reasons. And the biggest impediments have been regulatory uncertainty and um you know perception and knowledge. And now that this is becoming much more mainstream, like the US just passed this Genius Act. That's a pretty big move. Where you look at all the banks' cap tables not captain, excuse me, the bank's financial reporting, they're doing like a significant part of the revenue from payments. And same with all the credit card companies. Stablecoins are massively, massively disruptive to all of payments, to all of remittance, to dollarization globally, and which that goes into lending markets, into euro dollar markets, into international trade. That goes into derivatives, right? You start once that starts to happen globally, now you're like, wait a second, I can use a stable coin inside of a DeFi protocol and make a better interest rate than, pick your favorite bank. Oh, wait a second. I can use this to get a loan against something so I can, like the there's going to be massive, massive disruption in payments, in bankings, in financial products, and it's going to be much more global and much more entrepreneurial than anybody expects or thinks. The biggest impediment in the United States has been the lobbyists who've been, the old guard has been paying people to, prevent innovation and change because they have a legacy to lose, but it's time for them to lose that legacy.
No, I think the tokenization of financial assets, it's a must, and it's almost like a sort of foregone conclusion now. It's just about how that will happen. But do you think centralized exchanges are the best platforms for that? What about the issue of custody?
Custody is like I have different views on custody. There's a few big custody players today, but to be honest, custody is not a technology problem, it's a process and people problem.
Just to clarify, Sean, I'm
Yeah.
talking specifically around the conflict of an exchange also holding custody of assets, which if
Yeah,
you
that's sketchy.
Mm,
Yeah,
mm,
I mean, yes, there's definitely issues with that. Again, it goes to trust, right? Like when you deposit, you know, $10 million into pick your favorite bank, and that they have less than, whatever percent, like 5 cents on the dollar, 10 cents on the dollar reserves, or whatever they are at, 20 cents on the dollar reserves. The exchanges generally, like, forget about, everybody that blew up before the lending platforms, Celsius, BlockFi,
mm,
et cetera. That is a issue through eternity for everybody that does lending. They lend more than they have. That's a risk.
mm.
And exchanges holding custody, it's a risk. I don't know how you fix that other than holding it yourself. And believe me, that sucks as well. I've
Yeah.
lost and had so much stolen. It's not funny.
Mm.
Um, I don't have a good answer to that. But in an ideal world, I would like to diversify um, and have, different processes involving people
Mm.
that protect, because I don't trust anybody anymore.
Yeah, trustlessness. We have to design that system not just on chain, but sort of there has to be
Yeah.
an off chain design to it. So fascinating having this conversation, Sean. I get it, but what's the painting on your wall really stand for?
Um, you know, I bought this, I think in 2018 in Chicago at a conference, and I forget the it's Joe C. Bellani,
Mm-hmm.
and this is like pre-COVID, this is like, I think Bitcoin was, I don't even know. Like, but I think it's super cool is it's shredded US dollars in the background. In the mask that she's wearing, it's the Bitcoin white paper. Yeah, it's pretty difficult. I can't move my laptop, but it's shredded US dollars. She has a gas mask and it has the Bitcoin white paper, um, kind of filtering things. And then it also has the ability to interact with an app, and the mask falls away and you can see the artist face. And I just met this lady at
Mm-hmm.
a at a crypto conference in like 2017 or 18, and I thought it was cool, so I bought it and framed it, and I still
Yeah,
have it.
it's not cool. It's super cool and super deep. I'll check that with you offline. Yeah.
I've got to wrap up. It was really enjoyed talking to you. And, Sri, this was amazing. I'd love to, stay in connection and however I can help in the future.
Absolutely. Yeah. Sean, thanks for being on Alpha Nash.
Thank you. It was a pleasure.